presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting here for the one and only Tom O'Brien. Tom's off today, and I'm looking at the Dow up 371 at the high of the day. Now, these candles that have this very strong, powerful move that we don't know where the close is, still got 33 minutes to go. 53 minutes to go. I'm looking at this and saying there are certain aspects to this Dow chart that are really good at this particular time. But if you step back and be a little objective about it, you'll see the things that I look at, and that is the MACD. The MACD's still got a tremendous amount of work to cross positive. You can see that the stochastics only now, it hasn't even gone to 20%, it's only now gone to the teens, to the 16%. The unbalanced volume, the little blue line here, is running very nicely, but it's that's not the only thing. And the 9-period moving average has got at 33,118, has got a long way to go to see that pink line cross the 33,237 level in the Dow for the 9-period to cross over the 14. It can happen, but it's going to require a lot. But what is impressive is that this pattern here that I look at, I always look at these patterns, see if I draw, if you can see my pointer right here. Strong line down, and then it makes this H pattern, an arch formation that looks like a lowercase h. Well, it held the left side low, and that's really important. Why? Because it now has a chance, without taking out that left side low on a closing basis, it has a chance to rally at least into the 34,000s. Wow, that's a big ask, but that's what you need to see. We're looking at the S&P. Oh, I should mention, just for full disclosure, we've been long the Dow since the low of October. We still long the Dow, some part of the Dow, from the low that was made in 2020 in March. So we've got these positions, and we were fortunate enough to get kind of an aggressive trading position in the Dow before the open on Wednesday. But we are raising the stops. I have to treat this with distrust, even though the technical picture is based on the whole technique that I was talking about on Wednesday, based on the Chapman wave Roman candle. I'm talking about this little candle here. I don't want to get into it now, but Wednesday's show discussed it as well as Thursday. It gave a whole panoply of ideas that you look for, just sequences that you look for after that particular candle, and everything's been met so far. So this is really good action. But wait a minute. This is very interesting because finally we've got some catch-up. You remember that for a long time the Dow was leading. Then the Dow failed when it made that double top at those peak Ds in the Chapman wave right there in the 34,300s. Came tumbling down, and I forgot to type this in. I believe it was 32,508. 32,500 was the low on the first. So within that context, have a look at this S&P. The S&P right now is above the 200-period moving average. That's the orange line. The pink is still underneath. The 9-period moving average is still underneath the 14, but it is moving up sharply. The histogram of the MACD has a long way to go to see. It'll take to about 4092 to 4108 for all these different aspects to go positive. That's a long way to go. The stochastic's still down at the 17% level. It should be a lot higher than that. On balance volumes running. So on a shorter term basis, what we're looking at is there was there was absolute denial. I mean, there were just so many negative stories at the beginning of the week, and all of a sudden, the sun shines. It's just amazing how the market does that. I don't mind, because what we do is technical analysis, and you don't care about the sunshine. Sunshine is the sunshine, but the market is the market. So you can see there's a pattern that I call the falling axe, where you got declining trend lines. The upper one starts to pull back, creates a trend line that's two joined highs, and then you go to the lows, and you can see where it's expanding with lower lows, lower highs, and much lower lows. And then all of a sudden, it kind of forms a base, and it tries to rally. That's really important. Now, I haven't gone to the weekly charts, but look at the weekly chart of the S&P. Holding this trend line, this inside track, was what was a repellent zone, has become a propellant zone. There's a lot of things that actually are working quite nicely. Look at the QQQ. The QQQ, let me just extend these lines. I call this that falling axe formation, that declining, expanding cone. I don't want to make it sound too complicated. In my show, the Tiger Technicians Hour, we go through all these things. And for subscribers to my opening call, they know that I'm always looking at these particular patterns. And you can see now, we're just about to try an attempt at, let me change my scissors a little bit, not quite working. Yes, you can see that we're getting close to the inside track repellent zone right there, and that would be in the 301-ish area. So let's watch that closely on the QQQ. The IWM, the Russell 2000, is trading. Whoops, get rid of that. Okay. IWM, here we go. So what I'm looking at, when I'm getting this up, here's the IWM. Look at that nice double bottom on the 200-period moving average in the daily. The weekly held the 14-period moving average, and you can see the tussle that's going on here in the monthly chart for the iShares of the Russell 2000 small caps to get that pink 9-period moving average to finally cross back up to go over the black to turn green. And the MACD starting to improve. The histogram of the MACD, stochastic still lousy at 35%, but that on-balance volume says that there has been buying. So that's the IWM. Let me just, and all of these indices have key support on the low of Wednesday. Just make it as simple as possible. Basil, could you look at BP? I'll do that right now. I think it's important that we take questions as well. So, I had this all notated, but then I had to shut down suddenly and couldn't save it. Let me just do this. You know what I'm going to do? I'll put BP here, and the next break, I'll do it during the break, and when I come back, I'll do it. So before we get to the break, let me just continue, since we're talking about oil. Crude oil has a very strong candle today. This is a Chapman Wave a green Chapman Wave Roman candle. If at any point in the next two sessions, this is a daily chart, there is a trade that lasts for 90 minutes or more below the long wick, the midpoint of the long wick, which means if there is a trade under 77 at any point next week in the continuous contract that holds for about 90 minutes, there's a real good chance we're going to test the low. But if there are two closes, just like we had that Roman candle in the Chapman Wave for the Dow, if there are two closes out of three candles above today's high, which so far is 79.87, whatever the high is at the close today, there are two closes above it. We can go to the next peak on the left side, and that'll be the peak of the 13th of Feb at 80.86. Basil Chapman, Tiger Technician. Oops, Basil Chapman sitting here for Tom O'Brien. My show normally at 10 to 11 is the Tiger Technicians Hour.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman here. So we're looking at BP, which is British Petroleum. Question came in, and let's just see. That was from Frank in the den. So this is what I'm looking at. If I go to British Petroleum, it's having a very good session today. I did this a little bit, I'm not sure if I did it too quickly or not. I need to just double check. Is that a peak or not? I think it is. So let me just get there. We've got 33.74, 33. Oh, no, that isn't. Okay, I couldn't understand why this wasn't working out. So yes, A, B, let me just do the notation quickly. A, B, C, that's all you do in the Chapman methodology. You try to identify, there we go. Yeah, so I'm not going to mess around with this right now. I'll come back to it. I'll have it all notated for Monday. But in the meantime, what I'm going to say is that there's a pattern that I look for in the Chapman wave, and that is in the context of straight lines and cups and arches. That's all the market is made up of. There's a pattern that I call the dreaded H, where you come down sharply after a big move up, and then you make an H pattern. If you take out that left side low, especially at a peak A or B, only just two peaks, and then you turn around and you take it out, that's really negative. It saved the day today. It almost did that, and I'll draw it in for you. Here it is. This is what I'm looking at. So here's you move down. That's the back of the H right there. And here is the arch formation. So that is saying that if there is, in fact, a move to the upside, and in fact, from everything I'm looking at now, I do believe it has the look of a D, a peak D that says this could be a deeper pullback, but the count so far, I can't do it very quickly. I'm looking at the pattern. All I can say is if there is a close above, it's at 40.22. If there is a close, this is British Petroleum, BP, PLC, ADS, it's a foreign company. If there is a close above 40.53, that's the high of the 28th, then there's a really good chance that you can go to and test that high that was made there. Now, this is a little different chart to something like an Exxon. Look, an Exxon has had a much deeper correction in the daily chart, even the weekly chart. If you look at a Chevron, so these are multinationals. Look at this. Look at that deep from 187 in Chevron on the 25th of Feb all the way down to the 158s. And now it's at 165 at the 200-period moving average. So I'm just going to say BP is in a delay mode. It is a kind of playing catch up. It's had much higher highs on the left side, up in the 46 area back in 2018-19. So there's a different context to British Petroleum. So you only asked me to have a look at it, and all I can say is that if by Wednesday there's not been a close above that level that I spoke of, 40.53, instead you take out today's low of 39.27, and then you take out this low right here. That's very negative. I think it's playing catch up. And you can see by the weekly chart, it's had a spectacular move, and now it's having a consolidation in the upper third, which is really good. So I'm saying that British Petroleum looks to me like it can go to the 41.50 to the 42.30 area. Then I think you have to be careful. I hope that helps you. And in this particular instance, as I say, even if there's a move from today's 40.23 below 39, the low is 30.27, below 39.68, I'd say be careful. But I do think there's enough residual strength. Next question came in. Where was it? I'm going to have a look here. I saw I wrote it down, I thought. Yes. So, okay, bonds. So this is something, the 99 level on the TLT, I've been speaking about that for some time. I said there have been so many patterns that have retested almost to the penny, months and months of upside that's come back down, and now it's testing the left side lows. Will this be the 99 area? Will this be some kind of a support for at least a bounce? Well, today, the TLT, this is the iShares Treasury, 20-year Treasury bond ETF, went from this arc formation at 99. Did I type it? No, I didn't. 99.15 on the 28th of December, all the way to peak A, B, C, D, E. Pulls back, makes this cup formation. We are so familiar with that. Has a double top. It had a high of 108.77 on the 18th, and it retests this by going just a little higher. It goes to 109.35 within $1. And look at this. I had this in the bonds, I think, but I'll do it on this chart here. If you do a vertical test, Tom always likes to look when he's doing the 10-minute chart. He says he looks at the volume. Well, look at this. If you do a vertical analysis, you'll see. In this case, I put in the MACD, the moving average convergence, divergence. It was very strong with the relative strength. That's the green and red lines, plus the blue on-balance volume, and the 9 period over the 14, the green over the black line, right on that date. And then when it got a retest, the first day or so of February, the price went higher and retested the high that was made even in December. Again, 107, 108 area. And then look what happened. The technicals were very weak and it came all the way down. Now what we're looking at is the technicals are just starting to improve. And that's important. And there's a gap. There's an IMA reversal. You get those in bonds. I'm not going to make a big deal out of it because they trade overseas. All I can say is that this market could continue rallying if, and there's a big if, let me do the TNX right now, TNX, I'll do the TBT, was the exact inversion of the bonds. And that went to a peak D. In the Chapman methodology, I haven't done that. The fourth highest peak D is where other things can happen. That's your objective. And then you do an assessment, see if it can continue higher. Look at that peak D in the monthly chart of the ultra-short Lehman 20-year Treasury bond ETF right there back in July or so of 2022. Look at this peak D right here that was made around about the 23rd of December, pulled back sharply, made a cup formation. I love these beautiful alternate between a cup and an arch and a cup and an arch. Here's the cup, Chapman wave inside track. This is the inside wedge, target resistance line. It went to it and then pulled back. And look at this. We made 2 days ago, that was yesterday, we made a high in the 32.75, and now we're pulling back. It seems to me that yields, in fact, could start to pull back. That'll be a very big thing for the market, at least one thing that's a positive just in the shorter term. So with that said, so that's the TLT. So I did that. That was the question. Next question was, Bitcoin. So I discussed Bitcoin this morning because I hadn't looked at it for quite a while, but I forgot that I had written in a particular technique in the Chapman wave. And for those of you who are interested in this, if you go to, if you sign up for my newsletter, the opening call, you'll get 8, 9, 10, 11 webinars that have all these different techniques discussed in great detail. So look at this. there's a particular technique. I don't have to go into the technique. I discussed it this morning, but I had forgotten about this, and it was Don, was it, who texted in to say, hey, what happened to the Bitcoin when that Chapman wave flat base unconventional restart to the 22,300s was written in? Did it ever happen? Well, it happened. So it's pulled back. So I'm just saying Bitcoin is starting to show a lot of pressure, but it's really basically in a sideways move. If it closes, it's at 22,365 right now. If Bitcoin closes under 21,500, then it's got a serious problem. Right now, it's just kind of stuck in this range. Basil Chapman sitting in for the one and only Tom O'Brien. The Dow's up 355. The S&P's up 60. I'll be right back because we've got some many other things to talk about. I want to talk about the steel stocks. I'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, we're back. Basil Chapman. I have the Tiger Technicians Hour every weekday, every workday, I should say, or market day between 10 and 11 Eastern Time. Call-in show just like this, and my newsletter is called The Opening Call. I thought someone had mentioned, can you give a preview of what you're looking at in the market? Well, it's really, I've been looking at this as a rotational market with a correction both on the upside and a correction on the downside, meaning that on the upside, when it starts to get extended in a particular sector, other sectors seem to take over. It's been doing this since the summer of 2010, when that low in 2009 just saw a spectacular move. And now what we're looking at is that mentality. There are just only moments when you get 80 to 85% of stocks just being smacked, and they all go down together. So this rotational aspect is really important because it keeps you in the market. For instance, we are long a steel stock. And look at the steel. Steel just broke out. In fact, steel is really close. You know, everyone's talking about this, the market smash and crash and burn and etc. And I'm just saying, I don't see it that way. I can't see it that way. Not when the deep cyclicals like the steel stocks are doing so well. Can you believe that the Van Eck Vector Steel ETF at 70.27, the all-time high was, did I forget to put that in? It was just over 70. It was at 70.43. 70.43. We are now, 8 cents away from an all-time high. Let me just open this up to make absolutely sure. This is the monthly chart. All the notations you see are my notations, hand notations. They aren't automated. Yeah, that's not an all-time high. All-time high was back in 2008 at, I should have remembered that, at 114.05. Oh, it's got a long way to go. It's only at 70.27. Yeah, but isn't this quite amazing under these conditions? So, and I love this particular pattern. This is like a cup formation. It's almost like a kidney or something. You've got your left side cup, and then you've got your right side cup, and you can draw a trend line here, and that's where you should start to see resistance. And then resistance is close. I'd say that's at about 70, between 73 and 74. I could even do a Chapman wave inside track repellent zone to say, hey, twice now it's been repelled when it gets to this area. If it breaks above it, and we'll make that green, that's really positive. Here we go, make that green, I said, right? There's green. And if I make this pink, this is the resistance area, we'll see if it's able to break above that. I wouldn't be surprised if we have a little bit of, so this becomes, because this is the starting point here at 17.61 in March. This is the SLX, that's the symbol. This is peak A. In the Chapman wave methodology, I should just mention this. I try to identify the low bar, and then we count each successively higher peak. We alphabetize them sequentially to the upside. A, B, C, D, E, F, G. It goes all the way to G. There's never an H. At D, other things can happen. Your objective is to get from a buy signal to a buy mode, meaning you should get to a D. The dollar has gone to a peak C, and it's just so close. It should get to a D before it has a bit of a breather. So what you're looking at here, you've got peak A, B, C, and I believe we are within 30, what did I say? Within 8 cents or something of going to, am I going to, yep, I'm about to do that wrong thing. I'm about to do this now. Yeah, and we are moments away. It could happen today. I don't think it'll happen today. It could happen next week, where we start leg D. That's your objective in the Chapman wave. But wait a minute. Is this a new breakout? Now, this is the big thing. Is this a new leg A to the upside or the unusual G? Well, it's a D in the weekly chart. So all I can say is at D, other things can happen. And the weekly charts, I'm watching that. That'll also become almost a D in the monthly chart. So I'm getting just a little bit cautious to say we might be getting a tad over enthusiastic in the very short term. But I also have to look at this and say peak A, B, C, D. There is no instant restart because that happens within 3 bars going to an E. So this has to be, I have to put this in here, and I don't like to do that. G says, oh, be careful. A says, are you kidding? Any pullback you should buy. And every once in a while you get this cross-fertilization of ideas where one says, oh, that's fantastic, and the other says, oh, are you crazy? And all I can say is that the action so far has been so positive that I'm inclined to think that this could turn into an A in a very choppy period, and it just normally makes new highs. That's a possibility, but I would not be thinking of shorting one of the strongest indices. Yes, okay, I'll mention it. Someone wanted to know about U.S. Steel. That's the position that we have. Look at that, peak A, peak B. This is a leg C today, also within very close to the 31.34. We're in at the 26s. High of the 3rd of February. I'm just going to put this in as a C. I'm not going to yet put it in as an F/C, an alternate count. I'm calling it a C in the daily, but it's an E in the weekly, unless it's recycling. And the high of 39.25 in April 22 was the high before it plummeted down to the 1641 level in July. So far it's acting very well. Another thing I wanted to talk about was PNAW. I was asked, could I look at that? PANW. Palo Alto Networks. Yes. So Palo Alto Networks came in with great earnings, big surprise to the upside. Look at this gap, and it's done a beautiful thing. When I look at gaps, I usually think 2 to 4 sessions are going to give me a tremendous amount of information. What happens on the gap up if within 2 sessions or 3 sessions it actually makes a new high without taking out the low? There's a whole bunch of things. So far, this is very good action. It's in leg E. If there's an alternative count, yep, an E in the daily chart. Only a leg. There's no other way I can count this. This is a leg A in the weekly chart. So if I look at all these things, and this is in the cyber, this is the cyber aspect, and the cyber stocks were fading. And look at the hack. I mean, look at this. It goes from a high back in October. Well, let me just check the date. I should have put that in. A high of right there in December of 2021. It makes a high of 62.46, and it comes all the way down to the 40 level, 40.65. I mean, that is a big move down, right? And then what happens is it's strong. I couldn't understand for a whole year. I kept saying, why are the cyber stocks doing so badly? Because it seems so important to every business, to everyone. So all I can say is that I think we've started to see for the first time that this cybersecurity area is starting to work. We have the hack in our portfolio. So a question came in here. Except for Costco, everything is green. Could you explain why with your charts this has not affected the market? So Costco, COST, made a peak. I was going to do that this morning in my show. I never really had a chance. There were just so many things that we're looking at. So Costco, Wholesale Corporation, grocery households, etc. In fact, I was just there yesterday. I don't usually go, but I had to do something, so I went there. Fascinating place. I have a lot of respect for Costco, I must say. So what I'm going to do right now is to say Costco is telling us a story, and it's telling us a story that it's been very weak for some time, but in the monthly chart, it is really just a sideways pattern. But you can't take one stock and consider it that it is a representative of the whole market. So Costco, as far as I'm concerned, says, let's look at this. But look at this craziness. You got CHS. Let me show you this. This is just a women's apparel company, a small apparel company. Look at the big.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
So just let me finish that up. So something like a Chico's, women's wear, I believe, women's apparel. So all of a sudden, look at this gap up. I don't know if it was news or anything. CHS's symbol is trading at 6.33, up 13 cents, up 2% today. But look at that gap. Just 5 days ago, it was trading in the under $5. And now it's at $6.32. So to answer your question on the Costco, I believe that Costco, the effect of Costco will be apparent at some point. But right now, for the last 3 days, fund managers are just chasing what's working. So I wanted to also show you something else, the techniques that I use, and I do this in my show. So if you're interested in what I'm doing here in the left side, right side, price time match, I call that bar symmetry. Look at this. I had said in the den about, let's see what time it was, at 3:29, and now it is 3:43. I say, would not be surprised if all the bursts of strength now start to make lower highs, but that 10-minute E-minute chart still has really strong technicals. 4,033 is the support if it's going to break down. So here what I'm looking at is peak F with a little doji candle. I love these doji candles that are high. See what happened right there at about 10 minutes past 3. Now it's starting to come down. You can see the 9-period moving has gone under the 14-period moving. This is not a big deal until you decisively take out this arch formation. I don't want to type in the left side, right side price time match, just to say be careful, because if there is a close in the next few minutes below 42, it's at 40.45 right now. It doesn't sound like much, but anybody who does anything with futures knows 2 points, it's like a blink of an eye, or it could take forever to get back there. But look at this. All of a sudden, you're starting to see the MACD and the 10-minute chart starting to weaken. There must be a lot of people trading because it's a little bit slow, I can see. But look at this. I talk about sessions as possible 2-click sessions. I unfortunately couldn't do that this morning. I had everything planned, but it just didn't work out because I had so many things going on. But look, from 3 this morning, the 9-period moving average went above the 14, and that was at about 39.78. I'll give you the exact figure. It was at 30. Let's go to the high of the day, 39 of the 10-minute bar, 39.82. This is the S&P E-mini. And then look what happened. It stayed above, even on those dips. It stayed above, even on the crazy 10 o'clock, 9 o'clock, 9:30 rally, and then the 10 o'clock smashed to the downside. Nothing happened. If you had just used this one technique and stayed long, right, anytime, well, not at 3 o'clock, but let's just say on the pullback right here, at about 7 to 8 o'clock, most traders are up at that time. Okay, if you did this as Eastern time, you would have been green, 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 green. And even now, with the chance that we start to make some kind of a bit of a sell-off towards the close, you would still have a chance to say 2 clicks, 1 click, and you're just sitting there waiting for your second click. I've been working very hard at trying to develop some kind of I'm getting closer and closer to some kind of a system that you can use on a consistent basis. All very well doing it once or twice, but to do it consistently, that takes a little bit of, takes a couple of things, but definitely takes tenacity. Let's be polite and say tenacity. All right, so with that, I want to get out of that, and then the question came in here. I'm just going to get over to this side right here. Question came in earlier on. I need to do this. So within the context of the overall market, the fact that the XLF, and that's the XLF is the financial ETF. This is the S&P Select Financial Spider Fund. It's done okay, but it really isn't leading. And this rally that we're looking at now, if this is the rally that in March takes the S&P from 35.93 where it is now, off the 200 period, look at these terrific springs of the springboards of the 200 period moving average. If it takes it any time in March into the 37.50s, nicely above the high that was made in around 37 at that peak D right there in February, early February, I will then be very impressed. If it starts to fail, and if that means if yields start to come down, and the financials don't like that, then we're going to see the 34.50 level. And this makes it very important. I'm just giving you spectrums of different sectors and indexes that I would be keeping an eye on. These are my parameters. IYT. I mentioned in my program this morning that the airlines, someone asked me about Rolls-Royce, and I said, wow, it's acting so well. The daily chart, the weekly chart's improving. But the reality is, if you look at the IYT, it is still struggling. It is doing okay off that 200 period. Look how many times it's hit this orange 200 period moving average. And it just it goes under and then it goes up, goes under, it goes up, and it's up again today. If this, and of course the I shares of the Dow Jones Transportation Average Index Fund, I mean, you've got airlines, you've got truckers, you've got, this is a mix of rails. It just, to have everything work, that's unusual. But look at this, jets, the U.S. airline, Global Jets ETF, actually doing quite nicely, holding well, not breaking down, but not breaking out. You want to see in March, if the IYT can have a good rally to the upside, if the Jets, U.S. Global Jets ETF, trading at 20.15 right now, can see 22.50 in March rather than 18.50 or lower, that's what you need to see. So I'm just saying to you that there are things to look for, but specific stocks have done very well. And now there's another stock that I'm going to talk about, which is Ulta Beauty. My contention has been Ulta Beauty is just, it's in a unique sector. Actually, it's not even a sector, it's in a very specific area, and that area is beauty. And beauty products in bad times, they are absolutely the last ones to really go. People will give up everything else before they're going to give up the beauty side of it. Well, I'm watching this closely because I had a doji candle at a peak E in the Chapman wave right there on the 23rd of February. It had an opening round number of 532.00. That bar also made the high, the all-time high of 537.82. And it has started to pull back. It hasn't given any signal. I mean, let's face it, stock that's just been, look at this weekly chart. It's done almost an A to B equals C to D. That's the lightning bolt pattern. In the weekly chart, it's done it a few times, in fact. So there's nothing wrong. I would not be thinking of shorting this, but I would use it as a bit of an indicator to say, if this finally starts to tank at any time in March, if you're seeing Ulta Beauty below 495, that's 50 points. That's 30 points below where it is now at 520. I think you can then say, now that's something to really keep in mind as at least a benchmark to saying they're not going to go down unless the whole market starts to pull back. So I'm just watching this one closely. The next thing I thought, was it an email I just saw that came with, yes. Well, let me just do this here. Let's see where the E-mini is now. This is what I like to do all day, either trading or just notating. There's your arch formation. It took out the left side low. Now we've gone lower, but now it's trying to bounce again. As I said, because that 9-period moving average in the 10-minute chart is so strong, to short it here, you have to get it perfect. and you have to get that 9 much lower down, closer to the black line, ready to flip pink. And that says there is still some internal strength. But yeah, we don't have to make new high.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So just looking at short-term patterns, these cup formations have been formidable for a few days now. It makes a high, and then it goes sideways, basically, but it looks like a bowl formation. Let's call it a bowl rather than a cup, sort of a narrow bowl. Look, you've got so many of these in the E-mini, and that says that I have a rule of thumb that at 352, a whole bunch of things can happen in the market if the market's had a really strong day. How do you know that it's not going to close at the high of the day? Well, at 352, if it starts to rally strongly, if it's not used up all its strength earlier on, going into 335, if at 352 it starts to rally strongly, then you can see a move. But it moves in very strong. The bars are like straight lines up, one after the other, and it goes right. And what it does is it doesn't go to 4 o'clock. It goes like for 5 minutes, 3 to 5 minutes after the bell. Closes not only at the day's high, but the after hours high. So let's watch that. My thinking was that if it started to fail just even a little bit more, then the 40-40 area would be the target at 4 o'clock. But I can now see it's trying for the bowl formation. Let me just draw it in here. Look, here's the bowl formation. It's trying. It's got another couple of minutes to go. And that says that it'll try for that particular high right there. This will be the midpoint right here. I've got a particular candle that I choose. Can I do it in time? Can I do it in time? Going around the bend in the first corner of the race. Yes, this is going up. All right, we've got it right there. I can do it to change it to green, put it in. Let's see if this works right there. I always like to look at two alternate scenarios, and it will tell you which one it wants. So this is the one that we're looking at as a potential, because at 352, suddenly it started to come alive. They're not big enough bars, but it is doing it. It's had a spectacular day. You can understand. There's a little bit of stuff. Is that the end of the show? That was Chapman sitting in for the one and only Tom O'Brien. I hope you have a wonderful weekend. Let's see what happens next week. The Dow's going to be closing close to up 55. If there's a doji candle on Monday, and in fact, Tuesday, that's normal. But if, in fact, somehow there isn't that 100-point sell-off on Monday, but it close up, that's really what you want to see.